Hi all, welcome to Saxo Singapore live webinar on Introductions to Mutual Fund. My name is Chylin, Relationship Managers with Saxo Singapore. So alright, let's now start actually on this live webinar. So for this is actually a disclaimer, which is that the presentation is actually brought to you actually by Saxo Singapore. So right now with Saxo, you can invest in mutual funds from the world top money managers with zero commissions and zero custody or platform fees. So in short, what are actually mutual funds? So mutual funds is a collective investment scheme. In short, it is a way for investors to pool their money and invest in a larger and more diversified portfolio of investment. So it is also a type of investment vehicle consisting of a portfolio of stocks, bonds, or other securities. So stocks can be in the US markets, China markets, and for bonds wise, it can be actually corporate bonds or even government bonds. It is actually managed by professionals with years of experience so that you don't have to constantly look at your investment portfolio. In returns, of course, the fund manager will charge you annual management fee, median range of 1.5%. However, why to take note that, right, for management fee, it's actually taken into the NAV, which is the net asset value. So in fact, right, the net asset value, which is what we know as the buy and sell price of every mutual funds, is calculated after deducting actually the management fees. So which later on, I will actually share on that part over there. So one fun fact is that for most pension scheme, it's actually invested into mutual funds. So for mutual funds is that it's actually governed by a set of rules, which is what we know as the investment mandates. So an investment mandate is a set of instructions on for how an investment managers may invest money for a particular funds. So they can actually specify acceptable investments, position risk constraints or other restrictions and benchmarks such as actually Dow Jones or S&P. So how exactly are mutual funds traded? So for the fund managers, they will collect money from a large number of investors, then use that money to invest in securities such as stocks, bonds, and even money market instruments. Each investors get a specific number of shares in proportions to their invested amount. So the pricing of each shares is based on the NAV, which is what we know as the net asset value. So it represents actually a fund per share's market value, the bid or the redemption price, which is what we know as the buy and the sell price. So in short wise, the NAV is also equals to the value of total assets minus of the value of total liabilities divided by the total outstanding shares. So unlike actually a stocks whose share prices are posted throughout the day, mutual fund pricing is calculated at the end of the day. So in fact, when you are actually buying or selling off the mutual funds, you are transacting directly with the fund house, whereas actually for ETF and stock, you are trading on the secondary markets. So one main question that actually individuals do ask is that what is actually different between open-end and closed-end funds? Is both funds itself are actually professionally managed funds that achieve diversification. So instead of investing into a single particular stocks, both of them invest in a collective of equities or other financial assets. Fund managers invest in larger and wider scale by pooling resources from many investors like you. So the difference is that, right, for open-end funds, it's actually offered through a fund companies that sell shares directly to investors. So example are actually mutual funds, hedge funds, and ETF. These are considered as open-end funds. Price actually for open-end funds are actually fixed once a day and reflect the fund's performance. So in fact, there is no limit to how many units an open-end funds can offer, meaning the units are unlimited. Units can be issued as long as there's an appetite for the funds. So when investors like you buy new units, the fund companies actually create new replacement one. For closed-end funds, it's actually reflected based on the market value purchase or sold at whatever price the funds is trading during the day. So in fact, for this, demand is what drives the share prices. So since market demands determine the price level for closed-end funds, shares are typically sold either at a premium or discounts to the NAV. So it's actually most likely that these open-end funds are to include actually alternative investments in portfolios such as actually futures, derivative, or foreign currencies. So one key difference is that what usually actually individuals clients do ask is that what are actually the difference between mutual funds versus ETFs. So now we can actually take a look and compare both of them. Firstly is volatility. Mutual funds and ETF are very well diversified. While individual stocks, they are subject to actually company specific risks such as the change of management or lawsuit. ETF are exchange traded, while mutual funds are not. Mutual funds are not listed, meaning you are transacting directly with the fund managers, while ETF are listed in the exchange. Mutual funds are actively managed with the aim of beating actually the benchmark, while ETF are passively managed to mirror the performance of the benchmarks. So as mutual funds aim to beat the benchmark by taking on more risk, right, there will be actually a possibility that it's going to perform better or worse than the benchmarks. Fund managers, in fact, are required to redeem units, which is why mutual funds have very low liquidity risk. ETF, on the other hand, suffer from the high bid or low spreads, with there is a lack of trading volumes and liquidity. So at the end of day wise, mutual funds they are actually transacted at the end of the day, while ETF can be traded as long as the markets are open. So in fact, if you are investing mutual funds with Saxo, do take note that there will be zero commissions, custody, or platform fees. Whereas actually for ETF are subjected to actually normal platform, custody, and commissions fees. So right now, we will be looking at some key benefit of investing in mutual funds. Firstly, experienced investment teams set the fund strategies, research investments, make trades, and monitor the fund's performance. This will help you to save your precious time by borrowing on the experience and the research of the fund managers. Mutual funds also offer an affordable way for you to invest in a wide range of stocks without paying transaction fee for each time that you trade. So this will help you to gain access to more complex products, and you can get access to a percentage of bigger basket of assets by buying into mutual funds. Because mutual funds they are invest in many different stocks or bonds. So this in fact give you an easy way to diversify your portfolio at a cheaper cost. As mentioned earlier on, fund managers are legally bound to actually redeem actually the units. So mutual funds actually provide greater liquidity compared to individual stocks and ETF with low trade volume. So right now, let's look actually at an example for dollar cost average. So for example, for example, John actually earned a monthly salary, and he actually set aside 10% of his income into RSP, into mutual funds. So for this is that by spreading his purchase out over the years, he was able to actually pick up an additional 22 units for the same amount of money. However, with John had invested all 6,000 in December, he would only end up with around 388 units, much lower than the 410 units he would have gotten actually from dollar cost average. So in fact, another way of how clients can actually invest into mutual funds is through dollar cost average. So these are some of the factors that you should consider before investing into mutual funds. In fact, the most important is the financial goal. What do you want to achieve from your mutual funds investment? Are you investing for your retirement, your child educations, or you're investing the money actually for future generation? So all these answer to So the answer to these questions can actually help you to narrow down which fund will works best for you. Mutual funds are typically more suitable for long-term investors. So let's just say in a scenario that you are looking to invest into emerging markets such as Vietnam, instead of actually purchasing individual Vietnam stocks, what you can do is that you can invest into Vietnam mutual funds. Another key point when it comes to investment is the risk to returns. What exactly is the returns and the risk that you are looking at? Depending on your risk tolerance level, your expected returns will be different. So from this, the risk and the returns part, you will be able to filter it out on our platforms. It is very important for you to know that how comfortable you are with risk and invest accordingly. Understanding your risk tolerance can help you select the funds with the best strategies and asset allocations that fits into your profile. Base currency of the mutual funds is in fact what currency are you using to invest into your mutual funds. And for yourself wise, are you looking to gain from the NAV or to income payment or both of them? And lastly, most importantly is, for example, you actually mainly invest your funds into fixed deposit, but you want to take a more managed risk to enhance your portfolios and maximize your potential returns. So in fact, you can look at mutual funds that invest into equities. By doing so, you are one step closer to a well-diversified portfolio. So right now on today, we are very excited to announce that we have added more than 3,500 mutual funds on our trading platform. So you can invest in funds from the world top money managers with zero commissions and custody fees. So through actually our fund screener, you can see the full list of mutual funds that is available on our platforms. But one thing, do remember to enable mutual funds product on our trading, on your trading platform. So by exploring mutual funds with Saxo, you will be able to include in a wide range of filters such as assets classes, categories, and also on the Morningstar's ratings. So in fact, here I have created a table to better explain the characteristic of funds that hold different assets classes. So for example, right now, we actually look at the money markets funds, which provide access to money market instruments worldwide. Money markets funds invest in cash and equivalent and have a short-term horizon. Risk and the returns are low, so this funds is actually perfect for those who want to park their spare funds while waiting for their next trades. So you will be able to see a full range of different equities funds, fixed income funds, bonds, money markets funds, etc. So when you buy into mutual funds, your investment can increase in value in two ways. First, dividends payment. So when the funds receive dividends or interest from the securities in its portfolio, it distributes a portion of the amount of the income to investor. For some funds, it will be actually semi-annual, quarterly, or even monthly income like your pensions fund. Mutual funds shares purchase are final after the close of the markets. So in fact, another way as the value of the funds increase, so that the price to purchase the shares in the funds, or what we know as the NAVs. So this is similar to when the price of a stock increase, you don't receive immediate distribution, but the value of your investment is greater, and you would make money should you decide to redeem your investment. So on our platform, you will be able to see the fact sheet for every single fund. So taking actually the look itself, fund sheet might be too complex. However, if we break it down for you, it's extremely helpful in deciding whether this fund is it suitable for you. So right now, let's take a look actually at the fact sheet. So there will be a few key points that you might want to be looking at before deciding which funds will be more suitable for you. Investment objectives will also mentions the main strategies and give you an overview of the funds. The fund's information will provide you with the base currency, which is extremely important as you might be subject to additional FX risks. Bigger fund size is usually better as it reduces the expense ratios as operating cost is spread over a large pool of funds. You will be able to see actually the performance of the funds wise against actually the benchmarks. So for Morningstar wise, Morningstar ratings also known as star ratings. So it actually measure a fund's past performance from 1 star to 5 stars. And the star ratings are calculated at the end of every month. So to receive a Morningstar rating, the funds must have a records of more than 3 years. And in fact, Morningstar is very helpful as it actually helps investors assess the fund's track records relatively to its peer. So it's actually one of the first steps in the funds on how you should decide whether or not you should invest in these funds. So moving on to actually some of the common terms for portfolio, you can actually take a look at under the portfolio analysis. There is some points that you can actually be looking at such as alpha, beta, Sharpe ratio, information ratios, etc. So mutual funds, do take note that because mutual funds, most importantly, is actively managed. So choosing the right fund manager is important. So think of it as a way that you are choosing actually a nanny for your child. You want actually a good nanny to ensure that your child get the best attention and care. So on our platform, you will also be able to look at the mutual fund trading conditions, which include actually some key points that I actually have highlighted over here, such as actually the issuer cut-off, the subscription settlements, redemption settlements, working days, and also what is the suggested minimum investments, additional investments, and also on order routines and order placements. So in the meanwhile, wise actually for subscription, for this particular fund, JP Morgan Income, it takes actually 3 working days to process and reflect on your platform. So in the meanwhile, right, the funds are held. You can't trade using the funds. So the holdings can only be sold after settlements. However, when you actually intend to redeem your funds, it will also take 3 working days from the date of sales to settle. However, unlike in banks, you can use the money from the sale to enter into new trade even before settlement. So the issue cut off is actually for subscriptions, redemptions, and switchings received by the fund house, which indicate over here the cut-off time. So anytime after that, it will be actually processed on the next dates. So we also have indicate actually the different session of order routing and order placement. So when it comes to order routines, the order can be placed but cannot be cancelled. For order placement, order placed at these sessions can be cancelled within the session. So in fact, why should you invest mutual funds with Saxo? Mostly, we actually have a wide range of funds, 3,000. In fact, we have 3,562 mutual funds on our platform. In terms of actually the cost, it's actually zero commission, custody, or platform fees. And it's only management fee. So in which the NAV for every mutual fund is calculated after deducting actually the management expenses. So you do not need, there's also no cost in transferring your portfolios to us. So another common question is, why are we able to do so? So we are able to do so as like other provider, we are paid the retro fees from the fund provider. In terms of redemption time, it's also shorter as compared to banks or other platforms. So by investing into mutual funds with us, it actually offers you opportunity to invest in high price assets foreign markets that may otherwise be deemed as out of reach. So you do not need to be an accredited investor, and yet you are able to purchase into bonds by investing into bonds funds. So it allows actually convenience in rebalancing your current investment portfolios and better positions yourself in the markets. So our platforms will give you actually a very good overview on how your portfolio is growing and how closer you are in achieving your financial goal. Okay, and right now, let's us do a platform walkthrough on how you can purchase mutual funds using Saxo Trader Go. Okay, so right now, we are actually at the platform Saxo Trader Go, and today we will be actually doing a platform walkthrough for mutual funds. So in fact, you will be able to filter a wide range of actually mutual fund on our platform. Firstly, you can actually include the watch list if you would like to actually include and monitor any of the mutual funds. Under here, the screener, you can actually use the filter list to select actually the wide range of mutual funds. You can actually select using actually assets classes, categories, currency, Morningstar rating, and etc. So over here, you will also be able to filter it via weekly returns, monthly returns, and annual returns. So right now, let's just use actually one of the fund house as an example. So for example, today we are actually looking to purchase JP Morgan China A shares. So over here, you will be able to see the performance of the funds over 1 week, 1 month, 3 months, 6 months, etc. So you will also be able to see the ISIN code, the symbols, and also in what currency will the investment be. So over here, you will be able to see the returns, the ratings, and what is actually the objective of these funds. Under the profile over here, you will also be able to get more information on these funds. So when you click in the documents, you will also be able to actually find our fact sheet, the prospectus. By clicking onto the trading conditions, you will be able to see the trading rates with us, and also in terms of the necessary informations which was shared to you earlier on. If you intend to purchase into these funds, all you need to do is to click in trade, subscriptions, and indicate how much do you intend to purchase. So let's just say that I intend to actually purchase 100,000 of euro dollars using actually 100 euros dollars to purchase into these mutual funds. As you can see over here, the cost, it is at 0%. Okay, and then subsequently, all you need to do is to click in buy. And you will be able to purchase into these mutual funds. So if you have any question, please reach out to rmsingapore@saxomarkets.com. And that's all. Thank you. Bye bye.